Hey guys, we are back. Today we have Steve Andrews, founder and managing director of First Choice Finance Group, a boutique sub-aggregation business to talk about debt recycling. Welcome, Steve. How are you going, mate?
Yeah, good, Leighton. Thanks for having me.
So I just wanted to ask a few questions. But firstly, can you explain to us what debt recycling is?
Yeah, so look, the way I like to explain debt recycling really is you're just washing all your income and all your investment income through your home loan and then pulling it back out. So basically, let's say you have a $500,000 home loan. Um, what you want to do is put all your income, all your investment income into the home loan as that draws down. So let's say it draws down $10,000. Then over here on the investment side, you draw that up $10,000 to go and buy more investments. And then the next month, income back in there, mortgage goes down, you pull the investment out over here and go and buy more investments. So debt recycling, you're just moving basically your non-tax deductible debt on your mortgage. You're paying that down while increasing your investment debt over here to go and buy assets. And obviously that investment debt is tax deductible. So that's debt recycling.
Yeah, awesome. That's awesome. And from my understanding, the master limit is attached to the debt recycling. And what is the master limit exactly?
Yeah, look, I like to think of the master limit as just your umbrella. So you've got this loan account or this loan limit with this umbrella, and underneath that umbrella, you can have up to 10 splits. Now, you might only have two, you might have three, you might have five, depends on each individual circumstance. But to give you an example, let's say you've got a home and it's worth $1 million. Let's say you owe 500,000 on your home, on your mortgage. So you can actually have a master limit up to 80% of the value of your property. So you can have a master limit or that umbrella of $800,000. And then under that umbrella, you've got your $500,000 split for your home loan. And then you could have a $300,000 investment split, or it could be three $100,000 splits. It depends on the individual person. And so once again, as debt recycling happens, so you buy income producing assets, you put all your income and the investment income into the mortgage, that balance goes down. And because you've got that limit of 800,000, you can draw that back out on your one of your investment splits, or you can create a new investment split. So basically, you're just washing all your income through the mortgage and then pulling it out in a tax deductible investment split.
Yeah, awesome. That's super interesting. And so what, like with this strategy, what type of person would suit the debt recycling strategy?
Well, obviously, someone that wants to pay their mortgage off and accumulate assets. So that mindset is first and foremost. But secondly, anyone from kind of middle to higher income. We've helped a lot of people that have been nurses, teachers, police officers. So probably from that income bracket up to the high income earners, because the more you can put into your mortgage, the quicker that goes down, the quicker you can pull out your investment portion to go and buy more assets. So, yeah, I'd probably say from that kind of middle income to higher income type of person.
Yeah, awesome. Yeah, nice. And is there a preferred investment approach with the debt recycling strategy?
Yeah, look, so definitely an income strategy. So, 20 years ago, I learned this from Australia's most trusted financial advisor, Noel Whittaker, in his book Money Made Simple. And he talks about basically how you want to pay your home loan off in about 10 years. There's actually no benefit paying it off sooner. Once you get to that 10-year mark, you're actually then better off having some debt borrowing to buy um, income producing assets and growth assets. Because by the time you get to retirement, you're going to have a lot more assets and a lot more income in retirement than if you just pay your home loan off to zero. So that's the equivalent of the debt recycling strategy. So definitely an income strategy. So whether you're buying an investment property with rental income or buying stocks that pay high dividends, or maybe someone's more advanced and they rent out their shares using a covered call strategy. or maybe they buy bank bonds or high corporate bonds, high yield corporate bonds. So, but predominantly an income investment strategy, because you want to take the income from the investment and put it into your home loan. That balance goes down, and then you draw back out on the investment side to go and buy more investment. So you're just trying to wash all the income through the mortgage, pull it out over here to accumulate more assets.
Yeah, gotcha. That makes sense. And so why should someone think about getting a master limit and debt recycling strategy set up right now?
Yeah, look, obviously, it's important to get it set up, even if you haven't yet got your investment strategy in place, because what you want to start doing is start paying your mortgage down. So that's one advantage. So just getting it set up right now, you can start paying down your mortgage while you're deciding what your investment strategy approach might be. Now, in terms of investment, you can buy property, shares. You can even buy private businesses. So if you're wanting to buy a panel beating business, you can use the funds to go buy a panel beating business. If you're an accountant and you want to buy another accounting practice, you can use those funds to do that. Or maybe a dentist wants to buy a dental practice. So you can buy a private business, you can buy a public business through the share market, or you can buy rental properties or bonds or whatever you like. So what we're saying though is get that set up, get that master limit set up. You don't have to draw upon that investment portion until you find an opportunity. But, let's say, the share market comes back a bit, or a property, falls to a price that you want to buy in at, or that business becomes available for sale. Well, having that structure in place, that master limit in place, it means that you can pull the trigger on that investment, and you don't have to go through the process of refinancing, getting it, that structure put in place, which could take a month or more to get put in place, especially if you're discharging another bank. So getting it put in place is important. You can start paying your mortgage down. You don't have to draw on that investment debt straight away until you find the right opportunity. So it's definitely best to get that structure, that master limit set up straight away.
Yeah, awesome. And so what does First Choice Finance Group provide clients with a debt recycling strategy, and what are the costs involved?
Yeah, look, so we're finance brokers. We're not financial advisors, so we don't give financial advice. Look, I am an Austrian economic analyst. I have studied a postgrad in applied economics, and I have an asset management business. So as an asset manager, I accumulate assets. Like I said, when I first heard this strategy 20 years ago from Noel Whittaker and others, I've used it to obviously, benefit myself. But we've also seen clients over the years where this strategy has really benefited them. They've paid their mortgage down while accumulating assets. And, so for us as finance brokers, we just want to educate. So we want to put out education out there, teach people, empower people how they can pay their mortgage off sooner while accumulating assets at the same time. And this is a great strategy to do that. And so, even though we don't give financial advice, look, there's some great resources out there for people. I absolutely recommend Noel Whittaker's book, Money Made Simple. Also, Top Stocks. I work with some fund managers. I actually have a YouTube channel, Finance Uncut, with 17,000 subscribers. It's a macroeconomic channel.
Yeah.
And so I work with a lot of fund managers, and I know that they buy that book, Top Stocks, each year, and they find some opportunities from that book. So these are things that we definitely recommend clients get hold of. We've got a whole bunch of resources that we give clients, but really we just provide that broking service. So we'll get that master limit set up. We'll get the finance structure in place so that they're ready to go and make those investment decisions. We can talk about their investment approach, but we can't give them that financial advice. But as for our service, it's free. We don't charge a fee for this. The The only costs involved would be refinancing, restructuring. So whatever the lender's costs are, an application fee or a discharge fee, valuation fee, etc. That's really it.
Yeah, nice. Awesome. Yeah, well, it sounds like debt recycling is a great wealth creation tool. And yeah, thank you so much for sharing with us and sharing your insight into the strategies. And I'm sure we'll see you soon. And yeah, thank you so much.
Yeah,
Appreciate it.
not a problem. It
I'll
was
see you
fun.
in the office.
See you soon. Bye.
Yeah, sounds good. Thanks, Steve. Bye.